Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is September 4th, 2025, and we're diving into the latest earnings report from Duluth Holdings, a lifestyle brand known for its workwear and casual apparel. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Duluth Holdings has just released their second quarter 2025 financial results, and there's a lot to unpack, from their net income turnaround to strategic initiatives in cost control and inventory management.
Revenue and profitability overview. Let's start with the financial highlights. Duluth Holdings reported a net income of $1.3 million, a significant improvement from a net loss of $2.0 million in the same quarter last year. John, what are the key drivers behind this turnaround?
Absolutely, the key driver here is the company's focus on operational efficiencies. Despite a 7% decrease in net sales to $131.7 million, Duluth Holdings managed to expand its gross margin to 54.7%, up from 52.3% last year. This was achieved through a promotional reset and better product cost management.
And how did this impact their earnings per share?
The adjusted EPS came in at 0.03 cents, which is a positive surprise compared to the forecasted EPS of 0.05 cents. This indicates that the company is effectively managing its restructuring charges and tax valuation allowances.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies. Duluth Holdings has reduced its selling, general, and administrative expenses by $5.2 million. How significant is this for the company's future?
This reduction is quite significant. The SG&A expenses now stand at $68.8 million, which is a 7.1% decrease from last year. This was achieved through better leverage on shipping costs and a reduction in personnel and depreciation expenses. Additionally, the company has reduced its inventory by 12.2%, which improves liquidity and reduces holding costs.
And what about their future outlook?
CEO Stephanie Pugliese has emphasized a focus on business simplification and leveraging core strengths. The company is maintaining its fiscal 2025 guidance, which suggests confidence in their strategic initiatives aimed at driving profitable growth.
EPS forecast and market reaction. John, the market was expecting an EPS of 5 cents, but Duluth Holdings reported an adjusted EPS of 3 cents. How did the market react to this surprise?
The market reacted positively to this earnings beat. The fact that Duluth Holdings exceeded the forecasted EPS by such a margin indicates strong operational control and effective cost management. This unexpected profitability is likely to boost investor confidence and could lead to a positive movement in the stock price.
With only one analyst covering the stock, how does this affect the perception of Duluth Holdings in the market?
Having a limited number of analysts can sometimes lead to less visibility in the market. However, exceeding expectations in such a scenario can amplify the positive sentiment, as it suggests that the company is outperforming even with limited external scrutiny.
Key takeaways. In summary, Duluth Holdings has shown a strong performance in the second quarter of 2025, with a notable turnaround in net income and an impressive beat on EPS expectations. John, any final thoughts on their investment prospects?
Duluth Holdings is on a promising path with its focus on cost control and operational efficiencies. The company's ability to improve margins and manage inventory effectively positions it well for future growth. Investors should keep an eye on how these strategies play out in the coming quarters.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Duluth Holdings' performance in the comments below.